Hi everyone. In this video, I'm going to look at FedEx's conference call for its fiscal year 2023 second quarter, which was held on December 20th, to try and figure out what's going on with FedEx stock because this is one of the companies that I find most interesting because you can tell a lot with what's going on with a lot of other businesses in the retail space, especially e-commerce, with what's going on with FedEx, right? If FedEx is experiencing an increase in volume, then you know that most likely online sales are increasing, right? Because that's where it handles a lot of its package volume is for sale delivery for sales from online e-commerce websites. So with that being said, let's get right into its conference call and see what's going on with FedEx and what that might say for other e-commerce businesses and businesses at large worldwide and specifically more so in the US. All right, so let's start with Rajesh Subramaniam is the CEO of FedEx, and he starts with saying that the declining demand trends that we saw in the first quarter got worse in the second quarter, and we are moving faster with more determination than ever to accelerate our cost actions. So if you're not familiar, FedEx last quarter noted that volume or um, services declined considerably as consumers started spending more money on away from home experiences and spending less money ordering things from websites and e-commerce sites. And so now FedEx is having to pull back its operations because it hired a lot of people, brought on a lot more planes and trucks and things like that to make sure that they get deliveries on time. Now they're having to reduce those costs, reduce those operations to match the supply level with the existing demand in the marketplace. And he goes on to say volumes declined across all segments, primarily at Express, which was down in the double digits. Revenue was down 3%. So that's interesting that volume was down low double digits in some of its segments, but revenue was only down 3%. And that's a result of FedEx raising prices over the last several quarters. It has been on the path of raising prices on all of its services as the costs of transportation have increased, fuel prices increased, and it's had to pay more to secure employees. So it passed along those price increases onto its customers. At FedEx Ground, where despite volume being down 9% in the quarter, we were able to grow both operating income and margin. Wow. So they've increased prices so much that even though volume was down 9%, they still grew operating income and operating profit margin. And then he provides an update on the aggressive and decisive plan to cut costs in fiscal 23 relative to the June plan. So from June till December, what changes happened in the plan? In the second quarter, they achieved over 9 million in costs, 900 million in cost savings, exceeding the target that they shared last quarter. That brings the total year-to-date progress to 1.2 billion. As we look to the rest of the year, we've identified additional savings to bring our target for fiscal 23 to approximately $3.7 billion in cuts. So they're on a massive cost cutting campaign. Another area their strategy they're implementing is to improve packages per labor hour. And in the second quarter, that metric increased 3.5% year over year. So this is another step FedEx is taking to ensure that it drives profit growth despite declining volumes. And now we move on to Brie Carere, FedEx Corporation's co-CEO, saying that we announced a 6.9% general rate increase in September, and I remain confident that in a continued higher capture rate. So they're going to continue increasing the rate. We're also continuing to leverage surcharges to align our pricing to cost. So they're not done raising prices, and if their input costs increase, they're going to pass those along to customers. Our recent announcement for demand-based large package and US export fuel charge are good proof points. So they are passing along these higher prices. And this is not good news for e-commerce businesses. If you're thinking about the Amazon, Shopify's, eBay's, um, Chewy, these types of businesses, and regular retail, brick and mortar, even brick and mortar retailers like Macy's that do make a lot of online sales, it's going to cost them more to deliver these packages, and so they're going to be raising prices of their products so that even after paying for these higher fuel charges, that they're still able to generate a decent margin. And so overall, this is going to be inflation continuing to work through the system. FedEx has to pay higher costs, so they charge higher prices to e-commerce partners. E-commerce partners have to pay higher prices to FedEx, so they're going to charge higher prices to consumers. And as a result, that's going to drive inflation year over year. And that's going to be a continued headwind for consumer spending as well as stock valuations. All right, and I will end with this final statement from the CFO, Michael Lenz, talking about overall package yield growing by 8% year over year, driven primarily by higher fuel surcharges and base rates, partially offset by exchange rate impacts. So their price per package essentially grew by 8%. The price to deliver each package grew by 8%. However, the yield improvement slowed from the first quarter across nearly all levels and regions. So this wasn't the first increase in prices that FedEx has implemented since inflation took hold. And these price increases in the most recent quarter on a year-over-year basis were not as high as they were in the first quarter. So that's good news for consumers and e-commerce businesses, that the price increases are moderating instead of accelerating, right? So if it was the increases were this high, they're now this high. They're still higher, but at least they're not as high as they were in the previous quarter. All right. So hopefully that sheds some light on what's going on with FedEx and how that's going to impact some other businesses in that supply chain, if you will, the food chain that FedEx is a part of. And so you can get an idea of what other businesses are experiencing right now. All right, but that's all I've got for this video. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.